So let's talk about the difference in levels and entry points within commercial.
Yeah, so if you're going to a commercial route with a small budget, you're going to have more risk involved because it's more affordable on that front. And you really, from what I've seen, it's difficult to try and find a high quality asset under $300,000. Not to say that it hasn't in the past, but obviously prices have grown, and it comes down to, well, you also are looking for capital growth and income as well. So
yeah, it's not just a cash flow grab.
Unless you are, and some people, unless you are just purely income focused, then you can probably buy that $200,000 office space and put a tenant in there, and it'll pay for itself in 10 years, right?
Mm-hmm.
But what I've found with investors in that space is they come to me and they love the cash flow, but then they don't like the location because they don't feel confident around putting even just $150,000, $200,000 into that location, because it's the opportunity cost of, well, what else can I do with my money? And if you're looking into a location, you could have a great tenant in place, but you're solely then, if you're only at income, you're only relying on the business that's renting the property. So you're essentially a business investor, not a property investor, in my mind.
Yeah. There you go. So commercial property is more like business investing based on like how the business is going to perform in that economy or that part of the.
It's one part of it,
yeah.
And then you never rely on that tenant to be there forever. So you want to de-risk it by going, well, is this who is this asset attractive to from a lease perspective? It could be physio, it could be a doctor's surgery, it could be just a little cafe, coffee nook. You can buy those little coffee nook lease locations where it's like 10 square meters, and a cafe can run it. But as you know, that the risk of
it's high.
Yeah, well, you've got that many coffee joints, and then anyone that's actually good at making coffee. We talk about coffee a lot on this podcast.
Yeah, even though I don't drink it, but you drink enough too.
Yeah, but the reason why, because I've seen it. I've seen good little holes in the wall. They're just small businesses. They got higher turnover because they're starting out their journey in business, and then they get a following, and then they move to a larger premises in order to make more profit.
Mm-hmm.
So that's the constant mindset that I'm going into with.
They're not there long term. They're just making a start, and that's not what you want when you're in a commercial deal, because typically the longer term tenants are the ones that are going to allow you to have a higher property value if you sell it, because a longer lease is far more attractive for a purchaser.
Correct.
Because there's less risk for that new owner of that property.
Yeah, and generally speaking, the lower the purchase price for commercial, the higher the tenant turnover, so therefore the higher maintenance on your time to be communicating with your property manager, or if you're doing it yourself. And then also, it's costly to get lease agreements drawn up and revisited with commercial as well. So, and also with commercial, the accounting side of things might be a little bit more time intensive. So it just gets to that point as well. What is your actual goal? If you've got a couple of residentials, a couple of commercials, and you're just looking for an interesting high income play, and you've got a couple of $100,000 you want to throw at it, then obviously let's have that conversation. But I'd also be challenging you to think like, well, what's the point of doing it now if you could maybe stay on your trajectory? 2 years' time, you can then afford $1 million asset as opposed to a $300,000 asset.
Yeah. Okay. So that's a really good point. Does that mean that you would suggest starting to enter the commercial property market once you can afford to buy $1 million range asset or more?
No. I know. Sort of, it depends on the individual's circumstances and what they're trying to achieve. So later in life, you're going into more of a cash flow want phase because you want to be a self-funded retirement person.
Yeah.
And what opportunities arise there, like in the commercial space, having that conversation with a good commercial buyer's agent that is in the industry, they can shed a lot more light onto what the potentials are for your budget and cash flow requirements.